A few years ago, Jeff Bezos borrowed $1 billion in personal loans, but he didn't really need the money. At the time, Amazon was sitting on $63 billion in cash. So why did he bother taking out a loan? The answer is simple. It's not about the money. It's about how you make money work for you. In fact, the world's richest entrepreneurs regularly take out massive loans, often worth billions. Just take Elon Musk. Last year, he borrowed $465 million. In 2020, it was $2.8 billion. And earlier this year, he took another $3.7 billion loan. That's over $7 billion of debt in less than 3 years. What gives? Well, there's more to these stories than meets the eye. In today's video, we're going to uncover what these loans really mean for billionaires. You'll be surprised by what you learn. Here are a few things you should know first. We've got some major news coming up. A new channel is being launched very soon. It's currently in beta with a select few channels testing it right now. But we're getting ready to open it up to everyone. And as you might expect, there will be a limited edition drop that only those who subscribe to the waitlist can access. So if you want to make sure you don't miss out, head to the link in the description down below. We'll send you all the details once it goes live. Now let's get back to today's topic. The world's richest entrepreneurs regularly take out massive loans. And it looks like Elon Musk has done it again. Tesla has just secured a $1.3 billion loan from Goldman Sachs. And the timing couldn't be better. The company is about to complete its transition into an electric vehicle manufacturer. It's now profitable and growing faster than ever before. But what's interesting is that Tesla doesn't actually need this loan. They have $19 billion in cash and cash equivalents on their balance sheet. So why do they bother taking out such a huge debt? Well, there's a lot more to this story than meets the eye. Let's dig a little deeper. There are 3 reasons why multi-billionaires take out loans. The first reason is leverage. Imagine you're Jeff Bezos. You have $63 billion in the bank. That's enough to buy most companies. But let's say there's one company you really want, but it's too expensive. You would have to spend $100 billion to buy it. You could save up more money, but that will take years. Or you could borrow the extra $37 billion and buy that company. Now, that's the power of leverage. When you borrow money, you're using other people's money to buy assets. This means you can buy much more than you could with cash alone. And this is exactly what Elon Musk is doing with Tesla. The company is about to enter a new phase of growth. They're launching their first pickup truck, and they're planning to build a new factory in Texas. These projects will cost billions of dollars. So Musk is borrowing money to fund them. The second reason is taxes. Let's say you own a company worth $100 billion. It's profitable and growing fast. That means you're making millions every month. But you also have a lot of expenses. Your employees need salaries. Your suppliers need to be paid, and your customers need to be satisfied. All of this costs money. You could keep all the profits in the company, but then you'd have to pay taxes on them. Or you could pay yourself a salary and pay taxes on that. But there is a third option. You could take out a loan against the company. When you do this, you don't have to pay taxes on the loan. You only pay taxes on the interest you receive. For example, let's say you borrow $10 billion at 5% interest. You'll have to pay $500 million in interest each year. But you don't have to pay taxes on that. You can deduct it from your income. That means you'll save millions in taxes. And that's exactly what Elon Musk is doing. He's taking out a loan against Tesla stock. This means he doesn't have to sell any shares, but he still gets the cash he needs. Plus, he doesn't have to pay taxes on the loan. He can deduct the interest from Tesla's income. The third reason is control. Let's say you own a majority stake in a company. You have 51% of the shares, but you want to maintain control. That means you can't sell any shares. But what if you need money? You could sell some of your shares, but then you wouldn't have control anymore. Or you could take out a loan against your share. This way you get the money you need without giving up any control. And that's exactly what Jeff Bezos did when he took out a $1 billion loan. He didn't need the money. He already had $63 billion in the bank. But he wanted to keep control of his shares. Taking out a loan against your shares is also a great way to save on taxes. You don't have to pay capital gains tax, which is usually 20%. Instead, you only have to pay interest tax, which is usually 37%. So there you have it. The 3 reasons why multi-billionaires take out loans: leverage, taxes, and control. Now, here's the kicker. These same rules apply to you, too. Yes, you heard that right. You can use loans to grow your wealth, reduce your taxes, and maintain control of your asset. But you're probably thinking this is only possible if you're a billionaire. Well, think again. In fact, some of the richest people in the world made their fortunes by using debt. Take, for example, Sam Walton, the founder of Walmart. He borrowed heavily to open new stores and expand his empire. Warren Buffett, the legendary investor, famously said, "Debt is your best friend when you re-young and your worst enemy when you re-old." That's because when you're young, you can use debt to grow your asset. For example, you could take out a mortgage to buy a rental property. The property will hopefully appreciate in value, but you'll also receive rental income. Meanwhile, you'll be paying off the mortgage with other people's money. That's the power of leverage. However, as you get older, you should start paying off your debts. That's because when you're older, you'll have less time to recover from mistakes. For example, if you invest in a business and it fails, you won't have as much time to bounce back as you did when you were younger. In fact, studies have shown that people tend to become more risk-averse as they age. However, that doesn't mean you shouldn't take out loans. You absolutely should. But you need to be careful about the type of loans you take out. Only borrow money to buy assets. Don't borrow money to buy liabilities. For example, if you want to buy a car, don't take out a loan unless it's a taxi or a delivery van. Cars are liabilities. They lose value over time. Don't buy liabilities with debt. Buy assets with debt. So there you have it. That's how debt works. And yes, you can use it to grow your wealth, even if you're not a billionaire. You just need to be smart about it. Now it's time for you to take action. Here's what I want you to do. I want you to list out all the ways you could use debt to grow your wealth. Think about buying rental properties, starting a business, or investing in stocks. Then research the different types of loans available to you. There are mortgages, business loans, and margin loans, to name a few. Once you've learned more about the different types of loans, it's time to take action. And here's the best part. You don't need to be a billionaire to do this. In fact, you can start with just a few $1,000s. With that said, let me leave you with some parting words. Debt can be a powerful tool, but it can also be dangerous. That's why it's important to only use it to buy assets, not liabilities. Do that, and you'll be on your way to building long-term wealth. Thank you for watching this video. Please like and share it if you found it helpful. And don't forget to hit the subscribe button for more videos like this one.